What's going on, everybody? Happy September 1st. It's a new month, it's a new week, and we are going to start talking about the things that are important to us in markets and in life. And one of the most important things that I try to highlight within myself and our Alpha Trades community is that you must always try to pay attention to your mind, your emotions, where you are mentally. And a quote that always stands out to me is fall down 7 times, get up 8. It's a Japanese proverb that essentially means that no matter what life throws at you, always be ready to keep fighting and keep moving forward. But there are times in life when some of the best traders and investors in markets go through an immense amount of pain, a massive drawdown where you feel like you just can't get anything right. And I've been through that many times, and I feel like I'm going through that right now. I wanted to share this with you because I wrote my community just a heartfelt note just about how I've struggled over the last few months to not be able to get a good read on the market. And that has caused a pretty decent drawdown in my account. The 5K challenge account is currently down about 60%. Now, again, that's pretty much on par with where BTC is on year-to-date basis. But nonetheless, that's not an excuse because that's unacceptable to me, as my goal is to try to outperform the major index of the market, which is Bitcoin. Now, the problem with recognizing a issue like this is how you deal with it for most people. I want to share with you how others have dealt with it and how I'm dealing with it. And you can decide that if you're dealing with this kind of issue right now, how you want to go about it. What I've done, at least, is I've gone into a full cash position, not just because I need to stay away from the market, but I need to stay away from myself, from being my own worst enemy. You see, more often than not in markets, you're not really fighting other people. You're fighting your own mindset. You're fighting your own inability to read the market properly, or you're fighting your lack of discipline, you're fighting your emotions, or you're fighting really many things within yourself. So what I've done is taken a step back away from myself, who is a trader and investor, and to realign that person emotionally and mentally, and even physically, where I need to start, I guess, going to the gym or working out or doing more yoga or doing more meditation to feel like I'm more confident headed into my mindset, and with that mindset into the market. So what I do often is in the mornings, I try to meditate a little bit more. I try to do more yoga. I try to go work out, try to spend time with my dog, my family. These are the things that help me anyway to be the best person that I can be and to realign myself to dive into the markets again. I've never been a person where I need to FOMO into a position, right? I always manage my risk. I always do things that are supposed to be the right things to do in the market. But sometimes even doing the right things can mean that you can do all the right things in the wrong way. And that itself means that you may die by death by 1,000 cuts instead of one big loss or liquidation. This has happened to myself and numerous amazing, traders and investors, which are far better than me over a period of time. So I want to share a small story with you from Stanley Druckenmiller, who is one of the longtime investor greats from the late 90s, early 2000s, and even now. And as you can see, here is a small little note about exactly what he went through a few years ago, or maybe a decade or two ago. So I'm going to read this off to you. And as you just said, they're making like 8% a day, and it's driving me out of my mind because I'm out of the market. So he's talking about the 2000 .com bubble, if I'm not mistaken. Okay. And this interview, by the way, is here on YouTube at Sohn 2022. It's a full interview. I highly suggest you guys read it. Okay. So what he talks about is, so we're now getting into March, and there's this little devil here going in March of 2000. The little devil here is going to do it. And the little devil here is saying, don't do it. Don't do it. And I think I missed the top by an hour. And you said I bought a few things. I didn't buy a few things. I put like, I think 6 billion, in which turned into a massive loss of 2 or 3 billion. I knew like 5 days after I did it, but the whole exit was messy. Now I'm down like 18% again. And I had just been down 18% the year before. I'm literally like an emotional mess. And to your point, I know I'm an emotional mess. So I go into Soros, and Soros is his boss back then. I go to Soros and say, I'm quitting. I need a break. I'm exhausted. I read a letter to Duquesne's investors, and I had, 2 firms going on. And I said, I'm going on a sabbatical. I might come back. I might not right now. I'm a complete mess. If you want your money, here's a number. Just call. We'll send you all your money back. I did cheat a little. I said, if you want to take out your money, I might not let you back in, but you're free to take it all out. So after that, I go to Africa with my kids. I don't allow myself to see the TV or read a financial newspaper. So I don't know where anything is. It's a true break, which is something I'd advise young traders to do. If you take a break, take a break. Don't just sit there and trade like your own account and mess around. And I know a lot of people, by the way, go through this stage, right? But I wanted to highlight this little snippet, this paragraph to you guys, because a lot of us try to take a break, but we still keep our charts on. We still, trade on the side. We still degen a little bit, whether it's NFTs or, punting Dogecoin or whatever. But when it comes to trading, you have to build your discipline properly. Okay. And this is what Soros Druckenmiller pointed out, which is that everybody goes through a massive mess of a time in their investing and trading career. If you have not, trust me, it's coming. But how you deal with that is probably one of the most important things. And as you can see, the best of the best do it this way. So I'm just trying to follow in their footsteps and things that I've done previously. Now, if you guys are not familiar with me, I've been trading since I was basically in high school. Okay. I used to go in college and take on alternative energies trades, and whatever money I could make out of that, that would be something that I would use to help pay for my tuition or help pay for lunch money or beer money, right? This was what I used to do. This is what I was known as. And I embodied that figure, through the years. But I went through so many tumultuous ups and downs, whether it was through college, post-college, and then now becoming a day trader. And it's rough, but you don't get to enjoy the fruits of the labor of a bull market or enjoying the massive upside unless you suffer through massive drawdowns. It's unfortunately just a rite of passage for the best of the best. You just have to go through this. But guess what? The amazing riches of the bull market are made in the depths of the bear market. That is 100% true. But it doesn't mean that every person is going to be the next future rich person or next future successful or trader just because you're going through the bear market right now. It means that you have to hone your skills in the bear market of building discipline, knowing when to step away, doing your research, dollar cost averaging or buying things when they're dirt cheap. That's what that means. And then on the upside, you're hoping that you've placed your money in the right bets, and you're hoping that those trades, those investments appreciate to the upside over the next few months or over the next few years. So I just wanted to share that with you guys because that was really important to me. And it's a heartfelt note that I wrote to my community. With my community, the Alpha Trades community, I'm always 100% honest. Whether I'm doing great, whether it's my trades, my stops, my size, we have a fully transparent challenge that I do on BitGet, right? Everything I do on BitGet now because I like the exchange, I like trading there. And it's very easy to show transparently exactly where I've taken individual positions, individual stops, where I've dollar cost averaged in, where I'm getting in, getting out. So that's one thing I like about BitGet quite a bit. Okay. And more importantly, when you start trading with, good volume, good size, right? And you're a loyal member to the community, you start getting airdrops, you start getting, fees back for the amount of trading that you've done volume wise. And that is really nice to me. Okay. So there's a link at the top right if y'all want to check out the BitGet referral link. Also at the bottom of my YouTube description, check it out. I think you guys will like it a lot. Now let's dive into what's happening in markets, right? Because a lot is happening in markets. Number one, probably one of the most important things that happened yesterday was the United States officials are trying to order the US semiconductor companies, NVIDIA, AMD, I think ASML, Texas Instruments, all these guys to stop providing chips to China. This is on par with basically saying we are effectively, going into a soft war with China over goods and supplies. It is, in my opinion, a bad decision because China can do something equally bad. We're already in a very inflationary crisis. But again, this is what the government wants to do. We have no control over this stuff, right? My opinion doesn't necessarily matter. Only my vote matters. And then what I do in markets matter. But this is what's happening. And now the question is, how do we deal with it? Because to me, this was probably the biggest news that broke down yesterday. And guess what? The markets took that in stride, broke down yesterday during the market hours and are breaking down today. Because what this effectively means is we are now making it very clear that China is our clear rival when it comes to semiconductors. And semiconductors in the United States are big. We need them for gaming. We need them for PCs and iPads and TVs and cars, right? And China knows that. And America knows that. And guess what? The country that's caught in between those two is Taiwan, all right? Taiwan is one of the most important players in this space when it comes to semiconductors. And when Taiwan is actually struggling between these two big foreign powers, right? And Taiwan being the semiconductor sort of king that it is, who is it going to side with? Well, more than likely, it's going to be America and the West because it does not want to get caught with being under the foot of China. And if that happens, once again, China is going to be pissed and it's going to retaliate towards America. I don't know about a war or anything, but China could easily invade Taiwan. And now you get another semiconductor crunch, which would further pressure other technology companies, other semiconductor companies, and push markets once again on edge, on the brink of being on the brink of just breaking down further. Because we already have enough problems to deal with. We have already enough uncertainties to deal with, whether it's Russia and Ukraine, whether it's supply chain issues, whether it's inflation issues, right? And the Fed is not letting up. The Fed is clamping down hard. Jay Powell said last week that we have persistent inflation. That is our first and foremost goal. There will be some pain ahead, and that we should not expect a pause or a slowdown, as you can see right here in interest rate hikes. He's making it abundantly clear that he does not care if the economy goes into a recession. He doesn't care if the markets break down further. Their goal is to get inflation down by any means necessary. And with this kind of news coming out when it comes to semiconductors, plus the fact that Taiwan itself is caught in the middle of some sort of proxy war of US and China, this is probably a culmination of a shitstorm in markets that you do not want right now. You just don't want it. You want more clarity, more civility, more diplomatic reasoning happening, but that's not happening. That's not where the governments are. That's not where leaders and officials are. Again, it doesn't matter where you are politically, it is happening. So how you deal with it is probably the most important thing. Now, this is where we need to start jumping into markets, because BTC in this particular area is clearly showing weakness, just like pretty much any other asset. What the market is showing me here is that Bitcoin is clearly weak, right? If you look at this little consolidation right here, it's just hanging on by a thread around $20,000. Okay, literally just hanging on. If this starts breaking down further and further from here, I could probably expect a straight flush back towards the June low around 17,500. And it may happen really fast. But after we sweep this low around this area right here, I actually don't know what's going to happen after that. I don't know if this is going to be a broad sort of double bottom, kind of like that, or like an Adam and Eve style, or if this is going to do this, and then just keep flushing down to 16, and then 15 and 14 and 13. I've talked about some weekly levels to be paying attention to on BTC. And you can see right here, right? If we start dropping on a weekly basis, we can still keep up this uptrend from 2017 with these wicks and stuff right here. And we may tag somewhere around 13,000 or maybe 12,000 at a deep level, right? So just keep that in mind that if we do have a massive flush, keep an eye on this chart. That could be a nice breakdown towards $13,000 or $12,000. Now, one of the strongest contenders in the market has been Atom and ETH. Atom has increasingly showed that every time it comes into this low where it's trying to breach this trend line, Atom buyers just said, no, thank you. We're going to drive this thing back up. However, Atom has now shown me that it looks like this is creating a wider distribution zone. And this is not a good thing. This is a clear high where sellers are taking, their profits and selling hard. And the buyers here are able to elevate prices back up, but then the sellers, once again, take control, sell it back down to range low. That means that more than likely, there is some good amount of selling happening in this area because we're not able to break out from here. If Atom was truly strong and it could go against the grain of the market and say, I don't care what's going on with Taiwan, and I don't care what Jay Powell says, I don't care what Bitcoin or Ethereum are doing, well, then Atom could have started breaking out, right? But the fact that it's not doing that means that the holders of Atom, the bigger firms, the whales, they might be de-risking here. And unless there's a significant bid in Atom to start driving this thing up further, it can easily start breaking down from here with the rest of the market, and it could create an ugly, spiral to the downside, back towards 950, back towards $7 or $8 down here. So just keep that in mind. Okay, Atom definitely one of the stronger contenders in the market, but be very, very cautious. Now Ethereum also, you guys know very well, it has been one of the best movers of the market, because it has a clear narrative right now. It has the ETH merge coming out. It has a strong fundamental catalyst of buyers who are thinking that ETH merge is going to be successful, right? But what if ETH merge is not successful? What if the news itself of the merge has been priced in? And what if the de-risking is already starting to happen, right? These are all things that you want to be paying attention to, because just because a news is ahead of us in the middle of September that ETH is merging, right, and it's switching from proof of work to proof of stake, right? Just because that's happening on the radar doesn't mean that the market has to go up when that does happen. Okay, so just keep that in mind that ETH is still looking a little bit weak. It's trapped in this descending parallel channel. It's below 2 points of support, this ascending trend line support right here, as you can see. And then this ascending trend line support, 1, 2, 3, 4 touches right there. We're rejecting that level right now. So if ETH breaks down, look towards 1425, which is the current weekly open. And if that breaks down, then we might flush all the way down to about $1,200 to $1,300. Okay. So anyway, I just want to mention that, like I said, right, trading on BitGet is one of those things where if you like using your Bitcoin assets or your Ethereum assets as collateral to trade, right, that could be something useful in bull markets. Unless in bear markets, right, you like trading with just stable coins, and that's where USDT futures could be of use. I think that's one feature that I like about BitGet that FTX doesn't have. At least they don't have it yet. So this is something nice. I think Bybit has this feature, maybe even Binance, but I like the fact that BitGet has both CoinM features and USDT futures. Okay, I just want to do one thing real quick. Let me see here. Retracement wise, see where we are right now. Okay. Yeah, we're sitting just above the 786 fib, but we're below the 618 fib right there, from the June low all the way up to the high, in August. All right, so just keep that in mind that, we've pretty much retraced most of this upside move from the June low. All right, let's see here. What else do we got? How is ETH looking? I mean, ETH also, like, I don't like the fact that ETH is kind of showing this sort of head and shoulders pattern. This is like, what ETH could do is, so this is, say, a head and shoulders, right? It could do something like this, like that, and then break down. So it could create another mini head and shoulders right there over the next, week or two before it ultimately breaks down. So just keep that in mind. Look for this high right here around 1700 to possibly get swept, and then prices could start breaking down. Because ETH has been pretty damn good at doing stuff like that. And if y'all want to use a easy strategy, right? What you could do is here's an EMA that you could use. Let's do 2 of them. So I like to use the 20. So let's do 20 at yellow, right? And let's use the 40. EMA. Okay, so I like to use a strategy when the markets feel like they're very choppy. It helps you understand where is the momentum shifting. Okay, so as of right now, what I see in the markets is when you start seeing this cross where the green, which is a 40 EMA, is above the yellow, which is 20 EMA, that means that the longer moving averages are now starting to go above the smaller moving averages, and price is below both of them, right? So that means that when price is below both of them and is rejecting, right, the moving averages, it means that the momentum has now started to turn to the downside, or turn bearishly rather. So that's clearly visible on the 4-hour. Now, what about the daily? How does the daily look, right? How's the daily looking on the EMAs? Well, here's how the daily looks. See that right there? Very, very close to that EMA flip where it's bearishly turning. So again, this is one of those signs where more often than not, when you start seeing that EMA flip from the yellow being above the green to then crossing of the green being above the yellow, that's a sign where momentum is shifting. Let me give you all a perfect example of how that worked out the last few months. Okay, here's how that worked out back here in November and December 2021. As you can see right there, when we had that flip on December 13th, 2021, see if I can zoom in a little bit further. This is December 13th, 2021, this time right here. See, once we made that bear cross, guess what? Price broke down, rejected those 20 and 40 EMAs. We had that bear flip, and guess what? Price has been selling off basically since then, right? Price has been selling off since then, and it had its bull cross here in July or last month, and now once again it's turning again, right? So these are the things that you want to be paying attention to in terms of EMAs or moving averages of how that momentum is shifting on different time frames. Okay, another strategy is VWAP. Again, if you want to learn more about this, you can join our community, thealphatrades.com. Like I said before, right, I've been trading for over a decade now. There's nothing that I haven't seen in markets or things that I haven't faced within myself that you haven't or other people haven't, right? But what I know how to do is stop being my own worst enemy, and how to figure out to get myself on track to focus on what's more important. Okay, as I said at the beginning of the video, right, learn from the best people like Stanley Druckenmiller. Make sure y'all watch this interview, and then of course don't ever give up, right? If you feel like you're meant for trading and investing and you are looking for financial freedom, this is the only market to do it. Okay, this is the only market in crypto where you can get in early. You can have the same kind of information, the same kind of access to new projects and new startups, new technologies that you won't get anywhere. So fall down 7, get up 8. All right, good luck, everybody. Y'all take care. I hope y'all found this video helpful, useful for your own benefit. Please do give me a thumbs up if y'all like it. I think I'm going to try to do more public videos and keep talking about my thoughts. I know people are struggling with all kinds of issues, whether it's inflation related, macro related, crypto or trading related. So I'll keep doing, videos as much as I can to give y'all whatever alpha that I have, that I'm using. Okay. And by the way, real quick, stocks, as you can see, right, they're not opening up very nicely, opening down, gap down today. Let's see if we could close up this gap. I think, even looking at, what is it, DXY here. Let's throw on DXY. Here's a dollar trying to break out. Again, not a good sign. Let's see if oil is starting to break down or break up. Oil looks like it's breaking down. Okay, this is actually a good sign, but the US equity markets, looking the way they are, like this, not a good sign, because that creates an external drag on crypto. All right. Anyway, good luck. I hope you all hit the thumbs up on this video. Leave me a comment of what you're dealing with, things that you would like to correct within yourself, maybe routines or books that you read, or trading strategies that you have. Okay. All right. Good luck, everybody. Take care. Hit the thumbs up and join our community if you'd like to. Cheers.